In a week where we have seen strong momentum in the markets, the end of the week printed a very opposite view across all board. And today we're going to be looking at the economic data, seeing if there is a fundamental reason to why we saw this large amount of opposition across board.
So if you're out there and you want to see what forex trading really looks like, this is the channel for you. Like, trust me, this is the channel for you. This channel is the raw documentation of actual progress and regressions that a person who is into forex seriously and also has a 9-to-5 job is like. This is literally the whole shebang.
So when I say we look at the fundamentals, I mean we're going to be looking at the exact data that was released for yesterday across board for every currency in the market. Starting with the Australian dollar, we have here the speculative stance as well as the PPI data for the 30th of January, and what you can see here is the speculative stance net is actually still bullish, not so much, but it's still good bullish, while the PPI year over year is neutral, but the quarter over quarter seems to be a bit bearish. So what does this mean? The producer price index, the producers are saying they saw a not so good or not better than prior situation in the Australian dollar. Now, this doesn't just on its own account for the change that you see across board. It's only for the Australian dollar, right? Heading into the Canadian dollar, we have a scenario where we have the speculative stance. The speculative stance saying, well, they are quite bullish in general. And then they had GDP information coming out. Now, month over month, the GDP for month over month November, this is November of last year, they witnessed a bearish GDP. But in December, they witnessed a bullish GDP. So the growth of that GDP between November and December last year is good. So by the end of this month, we'll be having a review of the January GDP. That will be next month, obviously, not this month. By next month, we'll be getting the GDP information and we'll be understanding, okay, this is where the economy seems to be growing towards to in the Canadian economy. Now for the Swiss franc, these guys, they don't release much news, but luckily we got some news. We have news for the speculative stance as usual for all currency. It was bullish, and then the KOF leading indicator for January is saying that the economy is not going as positive as expected, as well as the official reserve assets being very, very bullish here. So you can see they gained a lot in these numbers. Now these are all not supposed to be percentages, these are numbers, so I'm just going to put that right here. Good. So you can see like real big numbers in total. For the euro, they got the speculative stance. Now the speculative stance for the euro net, right, is bullish. The unemployment rate came out real good. The GDP year over year and even quarter over quarter for quarter four, meaning the last quarter of last year, is clearly bullish. So basically we can say the euro is one currency that has one market that has like real good news from just yesterday. Then the British pound. The British pound had a lot of news, right? Lots and lots of news, really good news for that matter. Well, first thing, we have the BOE consumer credits, which came out bearish, and then we had things like the money supply, which is also bearish. So this is for December anyway. Remember, they're always looking at 1 month behind, right? The month prior. The money supply for M4, which is the month over month view last year, also December, was neutral. The mortgage approval was bearish. They didn't approve as much mortgage as they used to approve, meaning they didn't get as much mortgage requests as they used to get. The mortgage lending is bullish, meaning they didn't get as much, they didn't approve as much mortgage as they used to, but they gave out as more cash for mortgage than they used to. And this is like it's a mixture of inflation and other things. It's not something I want to go in depth in this video. It's something I will go in depth in some other video. Net lending to individuals is neutral, not really not like it didn't beat the expectation we had, right? It didn't beat the expectation we had. And then the British pound speculative stance. Now, what are the speculators saying? They are standing bullish for the British pound. Let's head into the Japanese yen. The Japanese yen, they had a lot of news from just yesterday, right? They had a speculative stance being bullish, right? It's a bullish stance, as you can see right here. The industrial production month over month is bullish, so they produced like better than they expected, right? Better than expected. The Tokyo food and energy year over year for January now is bearish. So the reason why you're not seeing anything here and it's still seeing bearish is because these are numbers that are like indexes, right? They're indexes, and let's use the percentages for them. So it's percentages. You can see that there's actually a drop of negative 10% based on expectation, right? Based on expectation, but that's what's happening. There was no expectation for this. That's why it's showing you 0. But when you calculate the actual numbers, is distance between the previous and the actual is negative. Now, jobs to application ratio, right? A job to application ratio is bullish. Is bullish. Let's make this numbers. Yeah, perfect. So it's bullish, right? And they had like above 1, right? Above 0, which is which shows the ratio really moved a little bit. You know, there are more jobs available to the application, meaning there's enough jobs going on. The economy is most likely going to grow soon. Now, CPI, core CPI. The core CPI year over year right now is actually bearish. So core inflation year over year, that is bearish. The CPI itself year over year. Now, core CPI is specific items, while CPI is all like baskets of many items all together. So the CPI itself is also bearish. The food and energy month over month, right? So there's food and energy year over year, there's food and energy month over month. Same thing with CPI. There's a core and there's also the month over month and year over year. So month over month is bearish also. You can see all of this is not painting a good information for Japan. You can see, looking here, you can see all the inflation data is all bearish, meaning that inflation is getting high. Basically, inflation is getting high. The unemployment rate is neutral. The industrial production forecast for 1 month ahead, month over month, is bullish. You know, they're expecting the next month, right? This is February, to be good, bullish, but 2 months ahead, they are still looking at a bearish situation. So it depends on how good this one is. By the next month, the next one should be probably neutral or it could be bearish. The large retail sales month over month is bearish. Wow, lots of bearish news here. The scale retail sales, like large scale retail sales, is bearish. The retail sale itself, now there's a large scale year over year, and then there's the retail sale year over year. So when they say large scale, they mean large scale sales, like large scale retail sales. But when they say retail sales, they mean both the large scales, the small scales, the medium scale all together. Right, the medium scale, all of them put together year over year, is also bearish. The construction order, however, is bullish, and housing starts is bullish. So there seems to be like demand for housing, right? People are building, construction is going on for housing. Housing without food and without jobs, okay, there's good jobs, but housing without food, well, it may lead to other situations. Well, the central bank has to fight with that. Moving on, we have the New Zealand dollar. The New Zealand dollar, well, this currency at some point in time was really strong. But right now, what we're seeing here is that it is still good for the speculators. The speculators are still saying, okay, this is a bullish stance. We are putting in more positions, more bullish positions for this, right? Then the US, the givers, givers never lack, right? US is one of our biggest givers of news and everything that we deal with in trading. Basically, they are one of the most, should I call them, beloved view in the world. They are just giving every day. Yeah. So we have the oil rig and total oil rig counts. So the oil rig count is bullish, but the total oil rig count is bearish, and these are all economic activities. For their speculative positioning now, unlike other markets, there is net speculative positioning for items and all under US. For example, the aluminium is bearish, the copper stance is bearish, meaning People are no longer putting much trust in the copper, and copper has been one of the biggest indicator of the economic growth in the US recently, because a lot of companies, or rather a lot of speculators put orders into the copper because they know the AI boom, it really depends on copper. Why? So the chips that are being used to do the AI work, basically your system, your laptop, your phones, they're all made of chips, and those chips, they have lots and lots of metals, for example copper in it, lots and lots of copper in it. And if the world is moving into AI, they're obviously going to need materials that can carry out AI stuffs, right? Hence, this is what it's going to be like. Let me give you a visual example of something that everybody is aware of. So you want to make a bag, right? You want to make a bag, or rather you have a bag that is made out of pure leather. You have to get leather from where? A donkey. So if the farmers, right, produce a lot, they grow a lot more donkeys. That is, they train their donkeys to have much more donkeys than they used to, right? Because of the large amount of donkey available and donkey skin that we can then get to create leather, it means people are going to say, oh, the leather bag sales is going up. People want to buy leather bags. For leather bag sales to go up, we need leather to make those bags. We know that we just don't need leathers, but we need leather factories. Now, for leather factories to work, let's say there's a machine called leather skinner, right? So for that skinning to go on, it can only be done by something called a leather skinner. Just an assumption, right? People who buy and sell in the market, lots of traders, speculators, rather than going to say the price of leather is going to go up, they would rather spend money investing in the price of the leather skinning machine. So there they are at the very forefront of what is going to even produce the leather in the first place. This is what copper really is in the world of tech. It is the back of everything you see that is electronic. One of the biggest back of everything electronic, from your phone to your laptops, anything that has a chip requires copper. So if people are not putting orders into copper anymore, people are not longer trusting copper. There are two things involved. Either they found another metal that can do the job, or they see that expectation for production to drop. Two things involved. That's just it. So the copper speculative stance is bearish. The corn is food. We all know corn is bullish. Crude oil is bullish. I won't go into crude oil. Crude oil is long, like it's deep. Gold noticed a bearish stance from the speculative net positioning recently. Now, again, speculators, they speculate, and the reason why they are going bearish is not known yet. But I think the gold hype is really, really crazy. But then again, it is not wrong. A lot of people are not comfortable with the current state of the economy at large, so therefore they all piped into safe haven, which is gold and copper and silver. But let's see how it goes, right? Let's see how it goes. We have the Nasdaq being bullish. We have natural gas being bullish. We have the S&P going bearish. Now silver also, which I said gold, silver, is getting bearish. We have soybeans getting bearish, and we have wheat getting bullish. Now we have core PPI for month over month as bullish. The core PPI year over year is also bullish. The PPI month over month is bullish, and the PPI year over year is also bullish. Now the PPI for food, energy, and transport specifically, right, year over year is neutral, but the food, energy, and transport PPI month over month for December, now take note, everything I just said about PPI is month over month, is bullish. Now, what does this mean? The US inflation data for yesterday was absolutely good, real good. All the information released for yesterday was really good when it comes to inflation. However, the information for speculative positioning is slightly negative, like slightly negative. While the economic release for yesterday is literally flatline, it is neutral. All of this put together says the US, from just yesterday's economic news, is doing good. Basically, it's doing good. Now, all of this doesn't mean what you saw on the chart is the most accurate situation, right? It doesn't mean it's the most accurate situation. But then again, don't forget one thing. Yesterday is the last day of the week, and one of the major reasons you always see something opposite to the entire trend of the week on a Friday is the fact that a lot of huge traders are cashing out, meaning they are closing their trades. So, for example, take a look at gold. You see the massive drop on gold. That is about 9%. That is 9%. 9% in total, right? But in the total drop, it fell all the way. Like the total range was a 13%, 13.94%. That is almost 14% drop. But it was able to pull back all the way to just negative 9%, about negative 9% or so in total at the end of the day. So as you can see, this drop clearly says a lot of people ended up saying, okay, we've taken enough money, let's walk out of this market. That is one of the biggest, clearest information you can see. Now, what I have here is not the normal volume you know of. It's called volume delta. So if you use TradingView, you're going to see it. Why do I prefer volume delta to actual volume? So volume delta, what it does is it takes the total positive volume minus the total negative volume and gives you the final score. So if it's telling me heavy bearish volume in total, it means there were way more bearish volumes, like no much selling than there was buying in the market. If you compare this against the normal volume indicator, the volume indicator, it does all of that, but it just sums up everything and then gives you based on the close of the candle. So for example, you can see how huge this volume is. Yes, there's a lot of trading that went on here, but you can see all this trading was not, let me zoom in better. So all the trading that went on yesterday was not all bearish. That's the fact. You can see in total it is actually slightly bearish, meaning there were also a lot of buys that came into the market yesterday. And let's look at it. You can see this was all the way from yesterday being 30th, and you can see this is 30th. You can see that this candle went up, then came down, then went down, then came back up. So all this buying that occurred here that caused this up, same thing with this one, same thing with this one, same thing with this one, is all accounted for. You can see the day actually ended up with a bullish stance in the 4 hours, but on the daily you can see, let me put this back again so you can see that all this volume is recorded as bullish volume, whereas the delta, you can see how small the total volume is. It was 9.5k bullish. So by the time you add up all the positives and all the negatives, you take the negatives out of all the positives, you end up with 9.5k buying volume left, compared to what this is showing here, 138k. You may be thinking 138k volume here is just buy. So this is why I personally prefer to use the volume delta. This is how I look at the market. So what am I basically saying? Yesterday there was large drops. However, that drop is not just coming from should I say, just this fundamental news that the dollar gained strong views yesterday. No, it is also coming from the stance that yesterday was the end of the week, and we all know the end of the week is when people who have made like huge profits like to close up the market. So a lot of traders decided, oh, let's just close this thing, let it rest for a while. Maybe next week we'll come back into the market and see if we have other opportunities. So I hope you learned something new in this video today. If you did learn something new, do hit the subscribe button, hit the like button, share this video with someone who you think will find the education very useful for their trading career. Without further ado, I'd like to tell you thank you all for watching. See you all in the next video. Peace.